so that you don't feel asleep. My name is Paolo Guarnerio. I work at SDX as a senior business development. Today we will discuss about crypto infrastructure, and we heard this morning a lot of example of banks that have successfully integrated digital assets in their offering. That of course brings certain challenges, and with companies such as the one that we have on stage today, these challenges can be mitigated. So the goal of the panel of today is really to discuss about how these players can support, can facilitate the life of institutional players such as banks to adopt digital assets. So I will start with a short introduction about yourself and the company that you work for. Let's start with Katrin.
Thank you very much. Is that? Okay. Thank you. I'm coming from Ripple Metaco, and we are providing solutions and infrastructure for financial services mostly for companies which want to go into the digital asset space. And I specifically focus on the product side of Metaco, where we are providing custody infrastructure.
Hello, everyone. My name is Ilya Volkov. I'm CEO and co-founder of YouHodler. So we're a fintech company with multiple crypto to fiat products. So we started development in 2017 with strong focus on retail, and we have built a number of crypto to fiat products. And starting from last year, we decided to share our expertise and our infrastructure with others, especially with small and mid-sized banks and other fintech companies without crypto expertise. So basically, we connected two dots. So our expertise on the retail side and customer demand from other institutions. Happy to be here.
Thank you.
Good afternoon, everyone. My name is Frank van Zegveld. I'm running sales in EMEA for Talos. Talos is an institutional technology provider providing access to the digital ecosystem by one single entry. So we provide trading technology for both buy side and sell side, and here excited to be part of this panel discussion.
Good afternoon, everybody. Adriano Bertini. I'm head of strategy and product for Ledger Enterprise. For those that are not familiar, Ledger Enterprise is the enterprise arm of Ledger. For those that are not familiar with Ledger, hopefully a few of them here. They have 6.5 million retail customer. We custody about 20% of the total crypto assets. On the enterprise side, we're focusing on the institutional offering. And the institutional offering, we provide an HSM-based solution that basically has two purposes. The first one, making sure to secure your assets and provide cold storage. And second, providing multiple services, including our API, which will be part of today's panel, as we would like to talk about the new offering for trading, TradeLink. And thanks, CVA, for the invite.
Hi, everyone. So I'm Victor. I'm the CMO of Taurus. So what do we offer? We have two main activities. One is the infrastructure business, where we offer custody and tokenization technology, mostly to banks. The second one, so we are regulated by the FINMA, so we have a securities firm license, and we operate an OTF, so an organized trading facility, which is TDX, to actually trade both tokenized securities and cryptocurrencies.
Thanks. So, I mean, your company are involved on a daily basis with institutional clients, banks, both in Switzerland, but also outside. What are, according to you, the main challenges that institutional clients are facing when they decide to implement digital assets in their offering, and how your company is able to support them and to mitigate these challenges? Who wants to start?
I can start using my CVA hat. So this conference is a great illustration of it. So the main challenge is education and sharing and the expertise and experience, right? So customers of traditional banks are pushing their banks just to start this kind of offering, right? Mm-hmm. And many of them are still hesitating or struggling or still trying to find the best solution, etc., etc. So the key to success is just to, again, connect dots and then share the best practices and listen to professional service providers, right? And again, this conference is a great illustration of what is needed in order to speed up this evolution, speed up this adoption.
I agree to that, Ilya. I think it's key for all of us to be active, let's say, in this space by education each other, let's say, on what's possible, what's needed, and how we can evolve this new industry and new asset class. I think from one of the challenges what we face as a tech provider is, what we hear at least from our clients across the globe, is that they were looking for risk tools. Tools, let's say, how they can manage risk from what they are used to have, let's say, from the TradFi days, and see how can we manage risk, do we have visibility on our assets, how our clients are behaving, and so on. So I think one of the key things there is that we should explore and understand what people are needing and help each other to build those kind of solutions and provide them across the industry.
Yeah, I totally agree. And I spend my day with engineers, so I like to simplify things. And I see like 2022 being a defining moment for crypto. So we solve the problem of custody with crypto, and that was the first wave. So now we can say quite confidently that we can secure assets at a pretty good level. With, you know, in our solution is multi-authorization, similar to multi-signature, yet not multi-signature, and is HSM based. So we have the hardware enforcement on the different rules and the segregation between the players that will operate on the platform. So we feel quite confident that we can secure the assets, and it's proved the last 6 years plus that we've been in business with zero compromise and zero mismanagement. We are the most secure solution, and I think overall the industry is pretty secure. Now we're facing the second problem, which is what I call exchange risk, and what is in traditional finance called counterparty risk. We haven't yet fixed that problem. If I exchange Bitcoin with Paolo for Ethereum, if I send Bitcoin, there is no guarantee that he's going to send me the Ethereum. It's a silly example, but kind of like picture what is the problem that we have not fixed yet. Where there is, you know, any simultaneous exchange, there is no solution currently that really satisfies completely the managing of that risk. So we are focusing on that with TradeLink, and we're happy to discuss more later, and tomorrow we're going to have a webinar on that. So I think that's the problem that our industry needs to fix now.
Katrin?
Just to add to that, I think when I look from an operational perspective as a bank, it's also important to look at it from a what does actually change on an operational and technical level, because digital assets work differently than traditional assets, and to understand through education, but also to find out, okay, which processes, which IT landscape items do I actually need to change? Where do I need to change certain things, or also change roles and responsibilities to be able to process digital assets? For example, because you don't have a T+2 settlement anymore after a trade. Just those operational hurdles to actually overcome, and also lose the fear to actually tackle that.
Last one, because a lot has been said. The way we look at it also, so you have the custody brick, but also the tokenization angle. And in the end, at least from our point of view and our deep belief, is that custody and tokenization are the two faces of the same coin. Because at some point, for cryptocurrencies, so you just need a custody solution. But if you deal with tokenized securities, it's important also to have this tokenization layer, either to deploy a smart contract for the issuance, or the interaction with the smart contract, with the servicing. And this is where it becomes a bit more technical, but without getting into too much subtlety, and I will probably go later, it's very important to really have and work with the same team, because sometimes you have the custody team, sometimes you have the tokenization team. They don't always talk to each other, but in the end, they want the same. Mm-hmm. So that's a bit paradoxical, but that would be, for me, if we start really to have this integrated vision, probably there will be a lot of progress, especially when it comes to digitization of securities, which is what we are looking into.
Interesting. I think both Adriano and Katrin, you mentioned security. I mean, I think here we are dealing with a new asset class which require a certain level of security. So if for some reason the custodian get hacked or there is an internal fraud, the assets are gone. There is no ones to call. There is no way to recover the assets. So I think, especially for the custodian here, the custody technology provider, security is a key aspect. Can you maybe elaborate a bit more? Which technology you put in place? How can your clients feel comfortable in basically handling the security through your solutions?
Sure. I'll go first.
We are fighting who goes first.
If we think about security from a custody perspective, I think we can also divide it into different layers. The first layer can certainly be key management, because it's the piece which is very special to digital assets, and you want to make sure that your keys are extremely secure. But then on top, you also have a governance layer where you can define what approval levels do you need, what access levels do you need, what do you want to put in place as an institution in terms of security to access the keys and to use the keys to move your assets. Maybe on a side, if I paint a picture of that, you also have a lot of connectivity from custody to the external world. Thinking about the external world as blockchains, thinking about the external world as trading venues or any other third-party service. You want to make sure that those connectivities are extremely secure and that data is not being manipulated or changed or getting lost in transition when you are moving it to a different component. And I think the last piece, which is probably nearly the most important but often a bit neglected, is you also want to make sure, if you have an extremely secure setup and you have defined all your governance procedures and everything, you want to make sure that you don't have a single point of failure, someone who can actually just go and change the rules or go and create his own direct access to the keys, so that you also eliminate this super admin problem on top of that.
Yeah, I think just to add to that, and I completely agree with everything you just said, on the key materials, that's been our bread and butter. We've been 8 years doing this. So from a multi-authorization, also some solutions don't have segregation of duties. We enforce it at the hardware level. So an administrator that set the rules cannot have access to operate on the platform, and vice versa. So you want the segregation enforced at the hardware level. That's what we do. And then there is a third component which we recently introduced that very often is not spoken about, which is third party being integrated into the platform. So if you open up an API, now you can have third party building on your platform. And how do you manage that? Like, how do you build that security into the hardware security framework? And that's basically what has been the last 5 months focus for us. Just briefly, because I don't want to take the whole time, but one thing that is crucially important when you're talking about trading and collateral pledging is making sure that the state of certain balances is up to date. So if somebody's trading, how do you know that that's the state? How do you ensure, with the same security of the hardware enforcement, that that state is correct and is not changed? Because when some value, based on some value, is determined how much people are expected to trade or how much buying power they have to trade, you want to make sure that that value cannot be changed. Because you can only imagine the different ways it can be manipulated and the security breach that can come because of that. So that's our focus right now. That's our engineering challenge and where we spend the most time.
And then to add a bit on the security topic, I'm going to take an angle with the HSM versus MPC. So we do both, and everyone also, let's say that we'll be able to support it, but I think it's important to understand one thing. So HSM, so you use a hardware security module where you store the private key within it. MPC, multi-party computation, so basically think of it as a cloud where you explode the key in like 3, 4, 5 pieces that you call shards. The way to do MPC properly, basically, to make sure that you avoid some risk, some collusion risk between different parties, is first to have each shard between different segregated data centers, managed also by the segregated operational team. So if you want to do MPC, basically on an on-premise setup, it can take a lot of effort to do it properly. So it's also something to really keep in mind. That's why today HSM is so popular within banks, because this is a technology that they know, and that would be more straightforward to deploy with less resources, less resource intensive. At least I'm commenting more on the on-premise setup, because after, obviously, it can be deployed with a more cloud kind of system.
And I think to go back to your point, Ilya, all this might seem very complicated, and that's why it's important that banks and institutional clients approach a company like yours to get support in all these topics, because they are very important and highly relevant for their business, but they can outsource this knowledge to players that have decades of experience and have probably helped and support similar company to set up their business.
Yeah, exactly. So as we discussed in the morning, there are 5 layers, speaking about Web3 banking landscape. And of course, if we look at the top of the chart I presented in the morning, where we see traditional banks, they basically don't care about MPC or any other strange for them words. They care about the service provider, right? And that's why they're working with only trusted service providers. And this is how it should be, right? Because if we make some parallels to traditional world, so basically we don't care about what kind of paintings are used on the bills, right, of Swiss francs. We know that we have SIGPA, right, in Lausanne. Mm-hmm. We know that they're good enough to manage, security measures and everything when they're supplying different kind of paints to different central banks. But again, so central banks and banks do not care about these paintings. The same is here, right? And our mission is to really aggregate all these technologies and pack them in a format understandable by end users. And by end users, I mean like front-end bank and retail customer behind.
Thanks a lot. Frank, of course, Talos is not involved in custody. However, for digital asset trading, there are certain risks that banks need to be aware of. Can you maybe highlight the most important risk that institutional client needs to be aware of, and how Talos can support them to keep this risk under control?
Sure thing. I think it's key is interoperability. I mean, it's the same actually what we're saying here, right? I mean, it's connecting. I mean, most of you guys probably have, let's say, 1, 2, or even more service providers. How you make sure, let's say, that they can talk to each other in the correct way with proper standards, mitigating risk, understanding actually the protocols and how it's being done. So I think key in that, from that perspective, is that you, work with people who understand, let's say, the technology, understand, let's say, the needs of the technology, and work with risk metrics where we can leverage, let's say, or eliminate risk positions throughout the industry. So both with the custody providers, or if the payment providers, or if it's, let's say, the exchanges or the OTC desk itself, make sure that we make an institutional grade environment where we can eliminate those risks combined. Our role is there centralized, because we're, let's say, the center point where we connect all the participants here at the table. But key is that we need the information from our partners to make it happen, and get the understanding from our clients what they need and how they see it.
Yeah, and I think that's important also for custody providers such as Ledger to have this kind of connectivity to tech provider that are...
In that sense,
we speak with Frank quite often.
Exactly.
As I mentioned before, when we open our API and we start to be comfortable with exposing our API to external consumer, then the number of use cases can really explode, right? And even if we stay within the trading space, and our objective is minimization of counterparty risk, which is something that in traditional finance has been tried and failed for God knows how many years. I'm actually writing a blog on that, because, and eventually we'll come into a book, because it's probably like hundreds of years. I think even if you want to tackle just that, one solution will not fix everything. You will need to provide a platform, a framework that will open up the opportunity for integration with services like Talos and other services in the industry that together address that problem. We have a unique opportunity because with the platform that we have available in the market today, we can significantly reduce counterparty risk to a level that we couldn't even imagine. But we need to really push the boundaries of our technology and work together in the industry to make it happen.
Ilya, maybe from your perspective, since you are in both shoes, like how do you see this like connection with trading and custody, and how banks should also understand the importance to have an integration in place?
Both are essential elements of the final product. So if you have just custody, but why do you need just custody? We're not speaking about getting some stones and putting them somewhere, right? So it's a big puzzle. So you need to have custody, you need to have liquidity, you need to have some execution engines, right? You need to have different kind of coins, tokens, utilities behind them, right? So when we put everything together, we get final product. So that's why it's very, very important, and it's very good that we have some strong trend of collaboration of custody providers, liquidity providers, and end product providers. Like, for example, we have a few integrations of our products with Ledger. So end customer who'd like to keep using non-custodial wallet, right, hardware wallet, can simply access to our products from Ledger Live interface. This is another illustration of the importance of like combination of different pieces in order to really deliver really valuable product to the end user. So.
Yeah, maybe to add to that, it's a great example how we are trying to basically open up to the 6.5 million users the ability to access venues that otherwise they would not be able to access. So services like YouHodler really help in that transition from traditional venues into deeper liquidity that traditional retail player cannot access today. So it's a really interesting challenge that we're trying to solve there.
And actually, it's a very solid trend. I think these kind of technologies will challenge traditional banks to somehow integrate non-custodial approach to traditional banking services, which is very, very interesting trend.
Yes. Talking about, sorry, Katrin, you wanted
briefly,
to add something?
I think it also shows a little bit where we do have still the challenge in today's digital asset world, right? We have lots of silos which are not seamlessly connected. So for a bank to choose what to do and to decide where to go is difficult because of that as well.
Yeah. Talking about that, I mean, we have seen in the past few months, Bitcoin ETF approved in the States, major Swiss banks entering the space, as well, international group. Yesterday there was the announcement of Deutsche Börse. So what are, according to you, the major trends that you foreseeing having an impact, especially on institutional clients, when we are talking about digital assets adoption? Victor?
I would say 2 or 3. So number 1, those trends depend on the region, because this is very different. For instance, in the US, you have a sub 121 that prevents some US banks to actually custody crypto assets. Because of capital requirements, that's how you end up having 90% of the ETF being with Coinbase. So it might change, but it takes time from a regulatory point of view, and we will know this. In Europe, it's moving, so people will say, so we have MiCA, we have the regime pilot that will help. So far, where we see a lot of traction is really the Middle East. It's very dynamic, and I think the regulatory framework really plays an important role. The second thing I think that is critical, and each time we have banking clients asking us about this, because again, when you enter digital assets, you can either enter through custody of crypto or custody of tokenized asset, tokenization. And one of the questions they keep asking is, when you tokenize securities, which smart contract should you use? And here it all goes back to the standardization question. So you have the ERC 3643 from the Tokeny, the T-Rex. You have the ERC 1400, one of 10404 from Polymath Securitize. You have the CMTAT here in Switzerland. That probably this is the most commonly standard used. But when you talk to the team, they don't know which one they should use. And then you have working group at a global level trying to identify the pros and cons and how basically we can encourage basically even those banking clients to adopt those technology. And this takes really some time. I think that's so regulatory, standardization, and maybe I can ask a last one, which is critical, is you have several banks working with private blockchain, public blockchain. You have always this discussion. And it goes back to the point of interoperability. So you have many banks that will deploy, I don't know, Hyperledger Besu network for whatever the use case is. But you need to keep in mind that after, it's only available to the bank. So if they want to connect and to basically bring scale, you will have to build bridge. So after, when you bridge, which kind of bridge will you use? Is it lock and mint? Is it mint and burn? So you have a lot of technical questions that keeps coming up. That's still preventing this broader adoption. And basically, once we have this interoperability, standardization, and basically regulatory framework being solved, that will be really accelerating the scaling.
So basically, you believe that also with institutional adoption, these topics hopefully will be at some point.
They have to be tackled.
They have to be tackled.
It's like the cash leg. So you have the securities leg that you tokenize, but after you don't have still a digital currency. So the cash leg has not yet been tokenized. Are you using a tokenized deposits? A CBDC, when the central bank will come, what will be intermediaries? So you have many still obstacles, but it's getting there. So that's the good news.
Excellent. Katrin, you want to go next?
Sure. Looking at it from maybe just a different angle, but to the same problem. Today, we still have a lot of fragmentation because we don't have the standards yet. We don't have everywhere the regulatory framework. But getting there, having more and more jurisdictions which are looking at, okay, how do we actually also align to other continents or other countries in how we build up the framework. I think with more and more institutional adoption, we also see more and more that not everyone is doing everything anymore from the full value chain, but that you have more specialization along the value chain, that not everyone will cover the full life cycle, or not everyone will build up every capability required for everything, but that we have more and more also service provision amongst each other, which then goes back to we need connectivity between the different players to actually make it a functioning ecosystem which can be successful.
Yeah, maybe I go next.
So, go ahead, you first. No, it's more in addition to the institutional adoption, right? It also means for each institution it means different things, right? If you're a hedge fund, it's about trading. If it's a pension fund, it's about investment. If you're a bank, you're probably more like servicing your customer from a custody or payment fiat perspective. So that on top of, let's say, on the different jurisdictions or regulatory pockets like the US or EMEA or APAC, I think that combined is already a challenge in itself. And depending also the use case, how people are interacting with this ecosystem.
Yeah, just to add to that, completely agree. And I think that the stable coin space is very active right now. Like different providers are coming out with new stable coins. USDT continue to thrive, so it shouldn't be forgotten. It's up there, top 3. Especially in South America, the market is exploding, especially for payments. So I agree. I think we heard it 2 times that it's regional based. One thing that I wanted to add is about the ETF and Coinbase kind of concentrating the custody of the underlying crypto assets. I mean, I spent 15 years in traditional trading and on the portfolio management side, building a technology platform for traders. And one main rule is never put all your basket in one basket. And that's what we're doing now. So I think we're going to see distributional risk, hopefully, and that could be a great opportunity. And partially could come just in regular custody, partially will come to solution like off exchange, which I think will still play a major role. There is a lot of debate about how off exchange will develop, but I think it's still front and center to at least the institutional trading space, because it's a problem that is not being solved. And as we know, technology fits the best when there is an unsolved urgent problem, and that's where we have one. So.
Yeah, absolutely agree. Just maybe one point to add. Just one simple word: standardization. So we're slowly getting some standards for custody, standards for connections to liquidity providers. Even stable coins is some kind of a standard already, right? Even like we have some interesting use cases where Visa is testing settlements and stable coins, right? It's also some kind of a standard. Of course, nowadays we still have some flexibility, let's put it this way, but it's really like a way to get some standards for any kind of connections between different service providers and financial institutions.
Yeah, and I think that will come, of course, with more adoption, with more mature and sophisticated players that will enter into the industry. Maybe Victor, you mentioned that Taurus, of course, is involved with digital security as well as let's call it cryptocurrency custody. How do you see these two business line developing? Where do you see like the demand coming, especially from bank and
between securities and cryptocurrencies?
Yes.
First angle is you need to really understand that basically from a regulatory regime, those are two different assets. So the regulatory framework will be different on the two. So the entry point can be different. Honestly, you have most of the systemic bank will not touch cryptocurrencies. They will tell you, I want to tokenize to perform asset tokenization. Global custodian basically will try to digitize all their process, blockchain being one part of the process that they will implement internally. Switzerland, the big advantage that we have is FINMA is very progressive and supportive. That's why we are all here and we are able to have this discussion. And that's why even the big champions were actually Swiss and the industry is so mature. We continue to lead the way because now you have also, for instance, to support cryptocurrency with the staking, the regulatory regime getting clearer and clearer. It's not yet perfect, but it's getting there. Securities, so since February 2021, you have the Swiss Lex DLT. So in Switzerland, they recognize ledger-based securities. To make it very simple, one tokenized share gives you the same economic and social right as one traditional share. So it's there. But after, so in Europe, you have the pilot regime, but it's not yet there because you need to apply for a license with the DLTSS. So it takes time. So again, the biggest blocker so far to adoption is the regulatory framework. And still, after when you look at Switzerland, everything is there. So we even have the secondary market with TDX, which is like where actually you can, as an issuer, as a SME, I can digitize my share and admit it for trading. But it still takes time to understand what are the real benefits talking to the issuer, and it goes back to the initial point, education. So you need to explain what are the benefits, repeat it, but you need more, but when it comes to the global view, it's really regulatory being the pain point.
Yeah. Any other comments on the topic? Oh, okay. Yeah, it's I would say tricky questions, and I think I mean as an infrastructure provider, you need to be able to respond or give solution to demand coming from both sides.
Maybe just adding a little point on that sometimes we try to push solution where there is no interest. So as an industry, we should do something a little bit better to understand what is the pain points of the client and addressing for that. Yeah. And that's from Ledger perspective how we really shift it, because we are mostly engineers, so we spend most of our time to build what we think is right, and what we think is right doesn't always match what is the need of the market. So we have improved quite a bit on our side, and we hope to see the same in the industry.
In that sense, I mean, sometimes you have to be a bit bold, right? And building new features. I mean, otherwise the market won't move ahead. So still, there's a balance there.
Good
and
balance.
Sometimes,
Yeah.
but yeah.
Also, one thing on cryptocurrency versus security, because this is still a big question mark. So when it comes to the liquidity being provided, also how do you bring liquidity to tokenized security? So you need those marketplaces. But after, will you, as we talk private market, if it's, let's say, that pre-IPO segment, maybe it will be less liquid. So you will have what we call liquidity events that can be performed. So maybe an auction, like monthly, quarterly, yearly, depending on the need. If it's, you tokenize a fund, that would be quite relevant. But then you want also to mirror the public sector, the listed company, where you might have continuous trading, like you buy a Tesla stock or whatever asset. And this is where also it's becoming interesting, because after you need to market maker. But to market make securities, you might actually require a license. Exactly. That's why we saw so few players entering this, because you don't have yet those market makers. So to market make crypto, you can do it tomorrow, if I oversimplify. But for securities, it's different. So that's another also thing to keep in mind.
Absolutely. And I mean, there will be another panel later to discuss about that. But
and actually, that's why we need banks in this ecosystem, and that's why we need SDX, right?
Yes. You're right.
Any comments on it?
Well, I mean, I actually agree. I think one thing is about providing infrastructure support for a new asset class, which is crypto. And another thing is to actually completely change the way financial market infrastructure are working. So that takes time, because there are a lot of players involved. There is a lot of regulation that needs to be adopted. It cannot happen within few months, nor in few years. It might take decades, unfortunately. However, I think Switzerland is very innovative. We have excellent industry players that have contributed a lot to bring innovation into the financial system. So I'm very optimistic about that.
Yeah, just maybe one quick comment on that. We are lucky working for blockchain industry, because again, we have different layers of assets. Like at the bottom, we even have like meme coins, right? We can test technology using meme coins. As Victor said, there is no requirements to follow some securities regulation if you work with this kind of tokens, and it's a good way to test the technology. But on the top, of course, we have securities, and that's why, again, we need exchanges, traditional exchanges, basically, right, banks and everything. But again, we're lucky because we have everything to test the technology, right?
Mm-hmm.
Sometimes from a technology perspective, it can be challenging from the traditional finance participants. Legacy systems don't understand, let's say, cannot interact on, let's say, even the amount of zeros behind the first digit. I mean, we see them all, right? And similar in our industry, we're talking about different protocols, fixed, WebSocket. Well, maybe the traditional players talking about binary and are co-located. And so it's a lot of challenges on that front as well.
Yeah, and I think if you're going to see disruption, as you have seen the last few years, you're going to see it on the retail side, because on the institutional side, there is a level of being conservative that is much higher compared to the retail market. So we're going to see improvements there where there are pain points, as I said. So I think, not to repeat, but counterparty risk is a major pain point, and there is tremendous pressure from the institutional investor side to enter if those issues are addressed. Mm-hmm. So those we'll see, I hope, and kind of getting signal, quick resolution. Mm-hmm. But, we're not going to see revolutionary technology on the institutional side in the next, 3 to 5 years. We're going to see it on the retail side.
I mean, to touch base on that, I think what is interesting is that we see a lot of development of decentralized use cases around cryptocurrency and blockchain, especially in retail. We see an explosion of decentralized exchange with decent liquidity, self-custody. I mean, Ilya, you talked before about integration with the clients using Ledger Nano. How do you see, or do you believe there will be at some point the need from institutional players to have a connectivity to these decentralized worlds, and how you as infrastructure provider can support this connection.
Maybe I can start. So we have a DApp offering on the platform for institutional. Let's say it's not the most, the highest volumes, solution that we have. And there are challenges, right? Like Victor just mentioned about all the regulatory challenges in Switzerland, which is the most progressive, one of the most progressive regulatory environment, right? Now you have a global market. Each one has its own regulation. It's difficult on the institutional side. So the reason why we decide to look more to step-by-step incremental improvements to, managing collateral and issues related to trading is exactly for this reason. We do not think we're going to see a quantum jump into decentralized finance. We expect to see progressive improvements as the institutional investor understand the product and understand the benefit of using this product. So that's why we started, okay, counterparty risk is an issue. How can we fix it? Like, how can we improve it? You'll never fix it, but how can we improve it? Mm-hmm. How we can use programmability and blockchain to give a better experience and a reduction of risk, and then from there, move them slowly toward more like a decentralized solution.
Thanks. I think there is also one important point, which is the Financial Action Task Force, so the fast travel rule implementation, which is a critical piece to actually potentially start to tap into DEX. So we can maybe, so what is the travel rule? Basically implementing a KYC for a specific, once you send maybe more than 1,000 Swiss francs, you need to have a proper KYC being implemented. So before reaching out to DEX, you might imagine a future when every MetaMask user, Rabi user, whatever kind of wallet, non-custodial wallet, you will have to actually perform your KYC saying, okay, this is Victor Busson, I'm French, I live in Switzerland, and then you have different frameworks. So you have Coinbase Trust, you have Nota Bene, you start to also to have different actors being implemented, and then all the institutions getting there and basically being part of those networks so that they can share those information to really enable this opening to the decentralized world. But basically, the anonymous style or way is not possible, especially when you talk about securities.
Yeah, I mean, it goes back to banks or regulated institutions can't just do anything in a decentralized fashion, right? You first need a framework, you need the regulation, you need the proper procedures and risk mitigation actions around it. So I think there are still a few steps we have to do before we can go into that world.
Maybe, Frank, from your perspective, I mean, we see good liquidity coming from decentralized exchange. Do you have requests from clients to be able to access to this decentralized exchange, or at the moment the focus
is very, very limited on the institutional side? I mean, we cater only institutions. I mean, on the retail side, yes.
A lot.
And interesting as well, maybe for some of the market makers out there as well, right? Because they use, let's say, decentralized liquidity pools where they tap in or use that, let's say, for their offset or, let's say, their own market making capabilities. But direct demand, not so much. It's very, very limited. I mean, regulation should be key first, where they can tap into. They want to make sure they don't touch, I don't know, a Colombian drug cartel liquidity or some sort of sanctioned country, which is really hard to identify in most cases.
Yeah, maybe one last point, sort of like a wishful thinking. Like, there's also a lot of people lobbying to try to address this issue with regulation and trying to push for simplified and less cumbersome regulation. So I wouldn't take out of the table the possibility in the next year or so to see the, potentially moving to, deregulation or improvements in simplification of the regulatory framework. I think we're going to see a lot of push as the institutional wants to enter, right?
Yeah. Especially, I mean, on the custody side, I think, allowing individuals to retain custody of their assets, but still, offering sort of bridge to the traditional finance. That's very important. I think that's what you mentioned about your use case of a user who wants it to be connected from his ledger device.
Especially since controlling like every user is almost like an exercise of futility. So there's going to be some rationale hopefully in the next few months.
Perfect.
Here.
So with that, I think we are running out of time. So thanks everyone.
Thank you.